everyone. Welcome back to Web3 Deep Dive Podcast. I'm your host, Rachel Wolfson. I'm so excited for this next episode. I'll be speaking with James Seyffart. He is a Bloomberg Intelligence ETF analyst, and we're going to be speaking all about ETFs, exchange traded funds. This is such a timely topic right now as the United States recently approved the first spot Bitcoin ETF. So we're going to be speaking all about that and much more. Before getting started with today's episode, I also want you guys to please like the content and subscribe to my channel because your support really means everything. I also want to take the time to thank Edgenode and the House of Web3 for letting me film today's episode at this beautiful podcasting space here in San Francisco. Without further ado, let's get started with today's interview. Hey, James, how's it going?
Hi, Rachel. It's going pretty good. Thanks for having me.
Yeah, I'm so excited to be speaking with you today because, the recent passing of the spot Bitcoin ETF in the United States. So we're going to be discussing all of that and more.
Yeah, I mean it's taken up my whole life, essentially the last month or so. So yeah, I could talk about this for 6 hours if we had to, but I'd prefer not to go that long, I don't think.
Right. Okay. So before we get started, James, I kind of jumped right into it because I was so excited. But James, you are the Bloomberg Intelligence Research Analyst. Did I get that right?
Yeah. So I work at I work in Bloomberg Intelligence, which is if anyone out there's familiar with Bloomberg, this is Bloomberg's research arm, essentially. So I cover the asset management industry, broadly speaking. I also do a little bit of crypto coverage, and we primarily cover ETFs. So the overlap there of when I initially started doing a little bit of commodities and crypto between what's happening now with these ETFs and the grayscale trusts and other trusts. There's a perfect Venn diagram over there for these Bitcoin ETFs that we're going to be talking about today. So it's like it's not very often that something falls squarely into your expertise area, but here we are.
Right, definitely. James, before we get started, maybe tell the audience a little bit about your background, how you got involved with all of this, how you started at Bloomberg, and then we can go into some questions from there.
Um, yeah, I'll try to keep this short. So I've been at Bloomberg since I was in college, after college. I interned there before my senior year of college. I had a full-time offer before while I was back at training camp for preseason. So I had a job lined up and I knew I was coming back to Bloomberg. When I went back before that, I had interned at a hedge fund. So that I kind of wanted to do hedge funds and ETFs. And I basically pushed pretty hard to do that. So I was fortunate enough to go to Bloomberg and join a team where we covered ETFs and hedge funds and mutual funds and things like that. And I did that for 3.5-ish years, maybe a little more. And then I made my way over to Bloomberg Intelligence, which is our research arm. When I first went to Bloomberg Intelligence, I kind of hinted at this before. I was helping two people, Mike McGlone, who is our commodity strategist, and Eric Balchunas, who's my boss now, our ETF, senior ETF analyst, ETF strategist, whatever you want to call it. So that's why the ETFs fit squarely in my hole, because when I first started in 2017, Mike was like, do you know anything about crypto? And I was like, oh, I actually do, because I had gotten interested in crypto back in Bitcoin specifically back in 2016. Kathy Wood from ARC wrote a white paper and was giving a presentation at a TradFi conference for actually one of our competitors, Morningstar, that I was at. And that's where I really started diving in. So I was like, I know a lot. I've been toying around in this space for a while. We brought up coverage, and I've since moved on to become a full-time analyst covering the asset management industry, as I said. But my expertise covering it, crypto, is both from a personal perspective and then also professionally from the commodity strategy point of view. Lends my credence to covering what's going on here with the ETFs.
Got it. Okay, cool. I love that. It's a great mix of a background. You've got the crypto, you've got the traditional finance. So that's good to hear. Yeah. So James, before we get started, maybe explain what an ETF is in case our listeners don't know.
That's a very good point. I find that a lot of people just kind of they don't actually know exactly what it is. They just know it's this thing that trades and it works, and that's it. An ETF is an exchange traded fund. And if we're going to start from the real beginning, this guy invented it. It's based off of this idea of something called a commodities warehouse. So this will be good in explaining exactly how these things work. And but the background is commodities warehouses. The way it used to work is you would put commodities in a warehouse or a vault or what have you, whether it's soybeans or wheat or gold or silver. And instead of like those trading hands back and forth physically every day, you would basically go to a warehouse and there would be some fee to store this asset in their warehouse or vault or what have you, and you get a receipt. That's basically what ETFs are. They're depository receipts, and this receipt would say this receipt gives you access to X amount of this commodity, and you would just trade that piece of paper, that receipt, rather than trading the actual physical asset. And the invention of ETFs, the first one in the US was the S&P 500 ETF. And it basically is the underlying assets in this case, in that case, were the S&P 500 stocks. And in return, those receipts were the ETF shares, which trade on exchange just like a normal equity would. In the case of the Bitcoin ETFs, the underlying asset, rather than being shares of an equity or shares of a company, it's Bitcoin. So essentially, what these ETFs are is these shares are receipts to a de facto interest in the underlying Bitcoin. So basically, when people talk about creations and redemptions, and we can get into why they're so efficient if you want, but essentially when you're talking about creation and redemption, you're creating new shares and you're basically putting more Bitcoin in that vault and then trading those receipts on exchange. And at any point, the reason that ETFs work so efficiently is because at any point you can hand over the receipts and say, give me back the underlying asset, or vice versa, you hand in more assets and say, give me the receipts. And what that means is that there's none of this discounts and premiums that arise that we had to deal with with those grayscale trusts, because they didn't have that creation redemption option to basically hand over the underlying asset and get shares in return, or vice versa.
What year did the first ETF pass, or when were ETFs created, just out of curiosity?
Yeah, so the first idea for one was in the early 90s. Actually, the reason that ETFs were invented were actually, if anyone listening knows, the 1987 crash. Like basically stocks went down, collapsed completely on a Monday. I think it was a Monday. I think it's known as Black Monday or something. And I don't know the date. That I'm going to sound stupid, but there was
No,
a
it's
crash in
fine.
1987.
1987, yeah.
Yeah. And essentially, there was this huge long report from the SEC being like, basically, part of the crash was due to the way that futures and derivatives were used as like protection, portfolio insurance. And basically, as limits kept getting hit, more and more limits were getting hit. So it just created this domino effect, and it was a spiraling downhill cascade. And basically, they said if we had something that was physically backed rather than derivatives and actually held the assets, this would have prevented it. And this one guy at the American Stock Exchange, which ultimately got bought by NYSE, I believe, but he came with the idea. It was like, all right, let's actually do this. So the first ETF in the US launched in 1993. That was the S&P 500 ETF. That's SPY, the most traded, the most liquid security on the planet, period. Stop. Um, but they weren't the first ETF. The first ETF actually was invented in Canada because they saw what they were doing down in the US, and the SEC just took 3 years to get comfortable with this, and Canada's moved a lot quicker, and they actually got the first ETF. So
Yeah, that
Canada's had the first of like many things in the ETF world: the first bond ETF, the first real ETF, the first marijuana ETF, the first spot Bitcoin ETF, you name it.
Yeah, no, James, I mean, I'm so glad you're saying that, because I actually didn't realize that. And, Canada did have the first spot Bitcoin ETF. And now that you're saying that, it's like, wow, that makes perfect sense why that they would have done it before the United States. So good to know.
Yeah.
Um, okay, so let's explain the difference between, well, let's start off by explaining what is a spot ETF and what is a futures ETF.
Okay, I'll start with the future side
Okay, go
because it's
for it.
slightly more complicated, but
Okay,
it's the less efficient way to do things, in my view, and you'll
sure.
understand why the spot is so much better. So, with futures, basically they expire or they mature every month. So basically, what you need to do is you're buying a futures, you're signing into an agreement to buy or say hand over Bitcoin at a certain date in the future, right? So for every month, there's a futures contract for each month. So in a futures ETF, what they do for the most part is they hold the front month contract, which means right now it's January. Honestly, they're probably into February already. So let's say that the front month contract is February that they're holding. So they're holding the February contract, but as February starts getting winding down, they have to move out of that February contract because they're only futures, they only hold futures. So they have to sell those February contracts and then buy the March contracts the next month. The problem with futures is that there's no guarantee that those futures prices are going to be equivalent. And in most cases, like in most commodities, they operate in contango. And contango just means the next month is slightly more expensive than the current month that you're selling. They can also operate in backwardation, where the current month you're selling is worth more money than the next month, but that's kind of rare. And it's rare in Bitcoin as well. But in big bear markets, that is the case. But really, for the most part, they operate in contango, and specifically in Bitcoin in huge bull markets, like these Bitcoin futures ETFs. I wouldn't even say this was a huge bull market, but it was a huge run up in 2023, right? I don't even know exactly what the total numbers were, but the Bitcoin futures ETFs, because of that cost, so there's cost in just running the ETF, but the cost of rolling futures, it's referred to as roll yield. There's a cost to that contango. You're basically selling at the current month, buying in next month. And if you're selling and that price is a little bit lower, and then you're buying a little bit higher, even if it's just a little bit, you're losing return the entire time. So in 2023, the most prominent Bitcoin futures ETF, BITO from ProShares, which is an excellent trading vehicle, is going to track spot over the short term very, very well. Maybe even slightly medium term, but over the long term, it's going to lose because of those inefficiencies, right? So that's why one of the things we were saying is like, how can you allow a futures ETS, which is inefficient for long-term exposure for anyone, but you're not allowing spot? Now you go to spot, and spot Bitcoin ETFs, they are just holding the underlying asset. There is no rolling of futures that's going to cost. The only cost is how much does it cost to store this Bitcoin with a custodian, or in the sense of the commodities we were talking about, like in a vault, the way that we do gold ETFs. They're actually stored in a physical, the gold is stored somewhere in a physical vault. So that's just way more efficient. Like for most people, it tends to be cheaper. It's just the better way to do things. Now, there is a little bit of caveat in the way these ETFs were approved by the SEC, in the sense that I talked about the ability to like put new gold into a vault and take it out. Essentially, the problem here is the SEC didn't allow in-kind creation or redemption. So in-kind would mean I hand over Bitcoin as the authorized participant, the person that's able to operate in this capacity to create or destroy shares. I normally, in a normal ETF and any other commodity ETF, you hand over the Bitcoin and then you get the shares of the ETF back. And that's why the value of the underlying holdings are always equal to the shares, because at any point, if you get dislocated, you'll sell the one that's trading at a higher price and buy the one at a lower price, and you make whatever that difference is in an arbitrage profit. What the SEC basically said is you're not allowed to do in-kind creations for redemptions. You can only do cash. So that means that all these issuers are handed cash in that create or redeem process, which operates functionally the same way, except the issuers now have to buy or sell the Bitcoin to meet those creations or those redemptions of the ETF shares.
Got it. Okay. That's a lot to take in, especially for someone who doesn't know much about ETFs like myself, but you're the expert, and that's why I'm talking to you today.
Yeah, was any part of that confusing? Like, I'm happy to dive in and explain it a little better, or did it make sense?
So I guess the spot ETF, can you just go back and explain what that what that is again?
Yeah, so spot markets just means you're trading the actual asset. So in like oil, you're trading barrels of oil. There are no oil ETFs that are spot, because the storage costs are extremely high, and moving that physically around isn't nearly as easy as like moving gold from one vault to another. So maybe somebody will do it someday, but and also, like, you have other commodities, many other commodities, they expire, like they can actually go bad. So spot markets just refers to trading of the physical asset, which physically backed is the term we typically use, which I guess is kind of funny when you're talking about Bitcoin, but that's the way it would be described. It's physically backed by Bitcoin, stored in a cold wallet somewhere at a custodian, in this case Coinbase, Gemini, BitGo, or Fidelity.
Got it. Okay. And so with the passing of the spot Bitcoin ETF in the United States, why was that so monumental and for the world of ETFs?
Yeah, honestly, it was huge just because of the SEC's resistance to it, right? It was more so, it became a bigger and bigger deal the more that the SEC fought allowing this to happen, right? So the Winklevoss twins filed for one of these in 2013.
Mm-hmm.
Now, their application was likely never going to be approved. They did not meet a lot of the criteria the SEC had set out for how these things are supposed to work. There were some conflicts of interest. I can list off a whole bunch of things. But then as we got into 2020, 2021, when they were still denying these things, it was kind of a very big deal. It's like, I don't know what the holdup here is at this point. We don't need to get into the weeds on that front, but for the most part, it was such a big deal because of that. But also because we had these trusts, like the ones from Grayscale, that operate, and they are just less efficient means of exposure. So us people who are, I'm not a Bitcoin maxi, but I am a ETF maxi. So when I think about crypto, I tend to be Bitcoin first, but I'm an ETF maxi. Like I trust the ETF wrapper, I trust the ecosystem. I know will be more efficient and better for end people. So those Bitcoin futures ETFs, they allowed those to launch, but they didn't allow spot to launch, which was, in my view, immensely more efficient for any investor, whether you're a trader, a long-term buy and hold investor, a hedge fund, you name it. It's just a better vehicle for everyone involved. And they were allowing these futures ETFs, they were allowing these trusts to operate, trading over the counter at massive premiums and discounts, stuff that basically high net worth accredited investors were able to take advantage of retail investors. So that's why I was passionate about it. I just disagreed with the whole thesis behind what the SEC was doing. I viewed it as they completely were missing the forest for the trees. They were focused on all this little minutia and not focused on like the big picture of like, this will be better for end investors. You're not protecting investors by not allowing these things to launch.
Mm-hmm.
But why was it big in the ETF world? I mean, one, it was big in the Bitcoin world because one, it adds a little bit of regulatory clarity. You'll hear everyone's like, there is no regulatory clarity. We see it in all these court cases. So it's big in that world for that reason. But also in the ETF world, we had 10 of these things launch on the same day, which we've never had happen in the ETF world. We have some of the largest asset managers in the world involved in this. Some big just general ETF players. So you have Grayscale, which has billions of dollars. You have iShares, which is BlackRock, Fidelity. Kathy Wood's ARK is partnered with 21 Shares. You have Bitwise, which is a new up and coming asset manager. Invesco is one of the largest asset managers in the world, partnered with Mike Novogratz's Galaxy. You have VanEck, which is a large ETF player. Valkyrie is a new niche crypto player. Then you have Franklin, which is I don't even know how many years old they are, but they are an institution in the asset management industry. And you have Wisdom Tree, which is a big ETF player. They're a publicly traded company. So you have all these massive players in the asset management industry in this race together. There was a couple that had filed in the past and didn't even enter anymore. And then you have the fact that it was very political. So you have Gary Gensler, Elizabeth Warren. There was a lot of politics involved here. There was a lot of deadlines. So there's just a ton of money involved. So it wasn't just in the ETF world. It was just in general, it was like fascinating to watch all of this play out. And obviously we had court cases. We had the Grayscale court case, which was fascinating to watch. People were fighting against the SEC. There's so many reasons why so many people were fascinated and interested in watching this. And I know plenty of my friends and colleagues who are focused on traditional finance are tired of me talking about this, but I've just been so utterly fascinated by this entire process. And I really do think the SEC botched a bunch of things here.
Interesting. Why do you think the SEC was so hesitant to approve this spot ETF in the first place? If the Winklevoss twins filed for it, did you say it was 2013?
Yeah,
And so
2013.
why do you think, and then there was the futures ETF that got approved. I don't know when that was it what, 2021? I can't remember.
Correct.
Okay, so why was there such hesitancy with the spot ETF?
So I can talk about what is said publicly is why they were hesitant, but the real reason is political. That's that's what it comes down to. Like if you want to get into the nitty gritty of like, there is some basis in why they didn't want to approve these things, but at the end of the day, it comes back to the fact that it was political. Gary Gensler is tied in with the left wing of the Democratic Party. Elizabeth Warren does not like crypto, does not like Bitcoin, you name it, and she didn't want these things to happen. There are other people in that part of the Democratic Party that do not like this, and they didn't want it to happen. So as much as it was, there are genuine concerns with the underlying market that is Bitcoin, with anti-money laundering laws, know your customer laws, things like that. It really just comes down to the fact that this was a political calculus from Gary Gensler and the Democratic Party.
Right. Okay. Interesting. In terms of investing in an ETF, would it, are we going to see, or are we seeing more retail investors, or are we seeing more institutions investing? I know that I spoke with Kevin O'Leary for an article that I wrote, and he said that institutions will not want to use a spot ETF. So I don't know. What are your thoughts on that?
I think it depends how you define institutions, right?
Okay.
Advisors are not necessarily people think of institutions, but they control $30 trillion plus of wealth in the United States. And they are the predominant users of ETFs. So they will use these ETFs if they want long-term allocation. It makes sense for them to use this versus many of the other options out there for them. Now, if you have a client, if you're an advisor, and most advisors, the way they're going to think about this is they will put like, I want to put 2% of my client's portfolio into Bitcoin potentially. You don't want to set up an account at Coinbase or Gemini or BitGo or whatever and manage the whole process yourself for your clients, right? That's not something you're going to want to do. They're used to using ETFs. They have platforms where they can use ETFs. Basically, what this does is it takes the actual underlying asset of Bitcoin, takes it from the DeFi rails, the decentralized rails, and puts them on the traditional financial rails. So that's a huge benefit for advisors. Institutions, he's wrong in the fact that institutions are likely going to use this and trade if they want to trade short-term exposure. And they don't have like a process set up to handle like spot Bitcoin transactions or do OTC trading with Bitcoin. Institutions are going to use the ETFs to get their exposure for shorter term trades. And also, there's a lot of institutions that the way that they were set up, the paperwork that went into them, they have restrictions on what they can and cannot buy. Many institutions, endowments, they like can only hold securities and bonds and what you name it. They can't really hold commodities. So that means that even if they wanted to hold Bitcoin, they had no way to get exposure because they couldn't do it. This is the case with a lot of mutual funds and other ETFs. Now, other mutual funds, ETFs, endowments, like I mentioned, not saying they do want exposure to Bitcoin. I'm not going to sit here and say like, oh my gosh, there's billions of dollars coming from the institutional herd, which you hear from some people. But if they do want exposure, they likely will use this ETF because what it does is it takes Bitcoin and puts it in the ETF wrapper, and that qualifies as a security. So if they want exposure, they can use it for that. So the idea that institutions won't use it, I disagree slightly. I mean, now if you're looking at corporations who are going to put this on their balance sheet, no, they're probably not going to use an ETF. But if you're talking about people with short-term allocation or just looking to use it for a portfolio completion, like basically, like I said before, put a little bit of this, we consider this more in the hot sauce side of the ETF world. You will get benefit of using this. These things are trading with super tight spreads. There's no more premiums and discounts really. They're very minuscule. And right now they're literally free, even if they're not free even after these fee waivers are gone. They're like this, the fee waivers now, a lot of these ETFs have 0% fees. Even after the fee waivers, they're going to charge. Franklin's the lowest at 19 basis points, but you have BlackRock and a whole bunch of these other issuers at 20 basis points or 25 basis points, which is 0.2% per year. It's super cheap and super efficient to get exposure. So the idea that no institutions are going to use this, no. Like I said, I don't think there's some massive institutional herd coming though.
Why, and I mean, maybe this is a silly question, but why is it that we're seeing higher fees with like BlackRock versus other fees?
Yeah, I mean, so BlackRock is basically tied with the lowest fee offering right now at 20 basis points or 0.2%. So, I mean, the fees come down to in the ETF world, it's extremely competitive, extremely
Okay.
cutthroat. It's we call it the Terror Dome. Like fees are near zero for S&P 500 type exposure. Everyone's just undercutting each other. And what we saw right before these things launched, if you were paying attention, is every couple days we were seeing somebody else issuing a new filing and saying they were cutting their fees even lower, even lower. So the fact like where we are now at 20 bips is like ridiculously cheap for a new asset class that is in the ETF wrapper, and it's immensely beneficial to pretty much anyone. But what goes into that fee is basically what does it cost you. So you have to pay your custodian a certain amount of money to store your Bitcoin. I don't know what that fee is, maybe 7 bips or 15 bips or what have you. And then you have fees that you have to operate on your own. Some fees are more fixed cost than variable cost. So it's really everyone has basically been forced to lower their fees under 30 basis points if they want to compete. And that's where we are now,
Got
except
it.
for Grayscale. Grayscale left their fees at 1.5% or 150 basis points, but they came in with embedded liquidity and a ton of assets, a slight advantage over many of these other players.
Right, right. I remember writing something about that. Um, Another question that I want to ask, and normally I don't talk about prices because I don't like, price predictions and this and that, but I found it kind of interesting um, that, we saw the price of Bitcoin after the approval go up to what was it close? It was 49K, right? And now it's at 40. So why did we see that? I was actually kind of shocked that it went down after. I mean, what are your thoughts on that? If you want to answer this question, you don't have to, but I'm
Yeah,
just
so
curious.
I don't give any price predictions first of all, but
Right.
I can comment on this.
Okay.
I think a lot of the spike was a lot of these ETFs and the new buying and the new ETFs, and a lot of people were just buying Bitcoin on the fact that it was approved. But a lot of money poured out of Grayscale,
Okay.
GBTC. So that was basically selling pressure on the asset. But so far, even that day and any day since, there has been net buying from these spot Bitcoin ETFs. That said, the ETFs are only like one piece of the pie, right? There was a lot of people that were arbitraging the GBTC discount. So GBTC was trading at a 50% discount in 2023 at one point. So people were basically just unwinding that trade. There were people that bought it solely because they were waiting on ETF approval. So it ended up being a buy the rumor, sell the news type event. But still, I mean, for the most part, if you look at where the Bitcoin was trading in early Jan, I mean, we're roughly sideways. I mean, right now we're back at 42,000 today. So I mean, I'm not going to make any comments about where the price is going, but for
Right.
the most part, the Bitcoin ETFs and their flows, they're just a piece of the overall pie that is the supply and demand of Bitcoin that
Got
makes
it.
up the price, right? So they're just a piece of the pie. One of the other things that we saw that I could see, so we can see the flows into and out of ETFs. Again, there's no blockchain, so we can't see like the money came from here and went here, but a lot of the money that came out of GBC did find its way into other ETFs, we think. But one thing we can see is like the futures, the market that I was just talking about with why those futures ETFs are not efficient. You can see how much open interest is in there. It's almost like how many Bitcoin are tied to these futures contracts, and essentially the open interests collapse to the floor in the days after the launch. That shows us that people were long Bitcoin futures up until the ETF approval. And once it was approved, they got rid of those. That was net selling on Bitcoin as well. So you can kind
Interesting.
of back into looking where this is coming from. We also saw some selling from those spot Bitcoin ETFs in Canada we were talking about,
Mhm.
and from spot Bitcoin ETFs in Europe that we were talking about.
Okay. Oh, yeah. So that's a good point to mention. So there are spot Bitcoin ETFs in Europe as well, not just like the United States and Canada.
I would say so. The ones in US and Canada are much more similar in their structure,
Okay.
but functionally speaking, yes, there are spot ETFs in Europe. They're technically classified as ETCs, exchange traded commodities, or ETNs, exchange traded notes, but they're physically backed for the most part. Um, there's no reason to get in the weeds, but for the most part, the most similar thing to what we have here in the U.S. is really what's up in Canada. But there are plenty of them over in Europe, and but all most of the money and most capital market assets like are in the U.S. The U.S. Is over $8 trillion in ETFs or ETPs, I should say, um, and the global market's around 11 trillion. So to give you how much bigger the U.S. market is
Wow.
compared to the rest of the globe.
Yeah. You said ETP, is that exchange traded products?
Yes.
Okay.
That's the umbrella term we use for ETFs, ETNs, and ETCs.
Oh, interesting.
ETCs are only a regulatory thing only in Europe. We don't have those here in the US. We just
Okay.
consider the commodity ETFs to be ETFs. But there's some like back end differences in the way that they are regulated and structured that 99.9% of people do not need to know about. It's just different terms. So
Got it.
ETP we think of as an umbrella term that includes ETFs.
Okay. That makes sense. Good to know. So the question that's on everybody's mind in the crypto space, at least, is when are we going to see a spot ETH ETF? And will we see that? So I want to get your thoughts on that. People say, it's coming, it's coming, it's coming. Is it actually coming? I don't know.
The answer is I don't know. We were at 90% confidence in early October that we were going to get a spot Bitcoin ETF by January 10th,
Okay.
which we nailed, and we were earlier than most people calling for that. So the same deadline. So the reason that January 10th deadline we were using is because the first firm that was due for a decision from the SEC was ARK and 21 shares. They filed first, so that means their ultimate deadline. When you file these 19 befores, you'll hear like, "Oh, this was delayed. Oh, this was delayed," and then they denied or approved. For the most part, in the history of dealing Bitcoin ETFs, it was delay, 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 deny, and you didn't hear much. So we're now going through that same process with Ethereum, which again we have gone through before. But the first final deadline where they can no longer delay is on Van X application, and ARK and 21 shares the next day. So they'll probably get a decision on the same day. And I suspect all the other issuers will get a decision on the same day as well. Is May 23rd. So I think it's probably I would say more. I'm over 50%, probably around a 60% chance that we could see approvals of spot Ethereum ETFs in that May 23rd range. But there's so much nuance in the differences between what's going on with Ethereum right now and what happened with Bitcoin. I think the path of least resistance is for the SEC to approve these things. I think the SEC has shown that they are kind of pivoting away from fighting the Ethereum battle and Bitcoin battle and are just going to focus on waging war on the rest of crypto. Essentially, that's my base case. But like I said, I'm only at 60%. Yes, I think the odds are higher than 50%. I think that's the simplest way. I think the court showed that the SEC should lean on the fact that There is a regulated futures market for Ethereum in the same way there is Bitcoin. They have approved Ethereum futures ETFs in the same way they had approved Bitcoin futures ETFs, which the courts basically said they're like for like, so you should be approving the spot Bitcoin ETFs. But the SEC has kind of like tried to finagle their way with some of the language they use and the ultimate approval of those spot Bitcoin ETFs, and even in Gary Gensler's letters that he wrote after approving the Bitcoin ETFs. So more than 50%, but nowhere near the level of confidence we have for Bitcoin. There's plenty of ways that if the SEC and Gary Gensler really want to, they can kick this can down the road a little bit further.
Got it. And there's already a futures ETF for Ethereum, right?
Yeah, a whole bunch of them launched in early October,
Okay.
and they got no interest whatsoever. One thing I will say is, I think that, well, I think it's more likely than not we'll get a spot Ethereum ETF in 2024. I don't think the first ones will be allowed to stake. I think they will just be holding spot Ethereum, and you won't be able to generate yield with the underlying assets. Maybe I'm wrong. Hopefully, I'm wrong. But I think that if we do see approvals, there's going to be restrictions on what they can and cannot do with the underlying asset as far as staking ETH.
Right. And also, we have to keep in mind that Canada has also passed a spot ETH ETF. So if they did it, maybe we'll follow, as
I
history
mean,
has shown.
yeah, I mean, Canada approved it basically right after Bitcoin, like
Yeah.
very, very quickly in 2021.
Right.
So they're way ahead of us, and Europe has had it even longer. The Canada actually has an ETF that has staking income. So does Europe.
Oh,
They exist. Um, we'll see.
yeah.
We'll see what happens. But look, it makes way more sense for them just to approve this. We have the outline, the roadmap for what's needed to approve these things, and it makes sense to do the same for Ethereum and the way they traded Bitcoin. But obviously, there is no guaranteeing what happened, and like I said, a lot of the denials for the Bitcoin ETFs beyond once you got to 2021 and they were still denying things, that was politically motivated, not necessarily motivated by the underlying circumstances of whether they should or should not approve.
Mhm. So this may also be a somewhat silly question, but some of our listeners may not know. And actually, even I'm not that knowledgeable with it. So if a retail investor wanted to invest in a spot Bitcoin ETF, how do they do that? Like, what's the process?
Yeah, just like you would buy any stock on any brokerage platform for the most part, whether it's Schwab or Fidelity or you name it, Robinhood, you can just buy the ETF just like you would a stock, and you are going to have de facto exposure to the underlying asset, in this case, Bitcoin, just like you would buy any other ETF. Yeah, so it's very simple. That's part of the reason why I was talking about for advisors. They don't have to change anything. They don't have to set up new processes. They don't have to go through new hoops and jumps to approve to buy these things. That said, I talked about that and the fact that advisors would like to use this. A lot of these platforms, including some of the brokerages, like they don't allow an ETF to just be on their platform and anyone can buy it from day one. Vanguard's the most knowable, but they're like kind of different from what I'm talking about. So we can get into that. Vanguard's not allowing anyone to buy spot Bitcoin ETFs on their platform, but the Merrills of the world, the UBSs of the world, the Morgan Stanleys, the advisors and brokers that work with them, the default assumption is no, you cannot buy this just because it listed. They go through a due diligence process. They want to see a certain level of assets. They want to see a certain track record. They need to see a certain level of volume. They might only allow like big name institutions like BlackRock or Fidelity, their funds to be on the platform. And that's going to take time before those types of ETFs make it on the platform, and they give the green light for those advisors and brokers I was just talking about to ultimately buy these things. So if you're on one of those platforms, you can't do it yet. It's probably just going to take time. Vanguard has said they're philosophically opposed to the Bitcoin ETFs, and they're not going to allow their clients to buy it. Which is not the first time they've done this. They don't allow it with leverage ETFs either, so it's more philosophical than anything else on their front. But that was still slightly surprising to me when they did that.
Right. Are there any challenges associated with ETFs that you want to mention? I mean, it seems like this is great for the industry, but I don't know. Maybe there are some challenges, or maybe centralization within the crypto space might be a challenge if you're talking to like a Bitcoin maxi. I don't know.
Yeah, I mean, from my point of view, is like let the free market decide, right? This is undoubtedly against a bit against the ethos of the Satoshi's white paper. It's not. This is de facto centralization of an underlying asset. But for the most part, it's going to open up adoption. More people are going to be, more people are likely to have this in their portfolio. And if you don't want to use a Bitcoin ETF, it's not going to stop you from buying Bitcoin however you want and storing it in a cold wallet, not your keys, not your coins, what have you. So yeah, I mean, from an ETF industry perspective, they've had to work a bunch of stuff out. Wall Street has gotten better and better and better, and these market makers at trading these ETFs. So the spreads are getting tighter. Their discounts or premiums are getting tighter, even though they're already at like less than 0.5% in any direction. They're still getting tighter and tighter and tighter as market makers are getting more efficient at trading these things, at doing those creations and redemptions I was talking about. So it's just everything is getting more and more efficient. So the hangups would just be like figuring out like this is a bridge essentially to the TradFi world. This is the most efficient bridge that's going to have the most lanes and the most throughput to TradFi assets, in my opinion. So like that's the way to think about this.
Cool. Okay. James, I know that we're tight on time, so I'm just going to ask you, was there anything you wanted to add that I might not have already asked you about that you want to let our listeners know about ETFs or about Bloomberg Intelligence or just anything in general?
Yeah, I mean, no, you asked all the right questions. I can't think of anything you didn't ask, and you had good questions about the Ethereum side of things too. I guess it'll be one thing over the next couple months. I said that we're waiting, and I'm over 50% odds. There are things that can happen over the coming months that will be basically cause me to change my odds, whether things do or don't happen, or the filings that we see. So we're just waiting to see essentially what happens on that front. And then as far as Bloomberg Intelligence goes, yeah, we're Bloomberg's research arm. So if you have a Bloomberg terminal, you can see any of our research. I cover the asset management industry, and obviously my specialty right now has been Bitcoin ETFs and just crypto funds in general. But we have a rate strategist, we have a commodity strategist, we have an equity strategist, we have people that are doing specific equity exposure, specific credit exposure for companies. So we're a huge team of people that, and I get a lot of benefit of that. We have a litigation analyst based down in DC who helps me like understand some of these court cases. His analysis of what was going on in the Grayscale case was critical in my confidence in saying that we were going to get spot Bitcoin ETFs approved. So it's a team here, and then we also have a regulatory analyst, somebody who like knows the ins and outs of DC and these different administrations and different agencies. So like I lean on a lot of my colleagues to get the background for some of the stuff I talk about. It's not just me doing this all on my own. So shout out to the rest of them. But yeah, you can find my stuff if you're a terminal client. Very easy to find. Otherwise, I'm on Twitter and I can't share everything I'm writing for Bloomberg. But I share a healthy amount on Twitter, and I'm usually responsive to most people. So my handle is JSEYFF, so you can find me there. But yeah, no, you asked all the right questions, and it'll be interesting to see how this all plays out with Grayscale's outflows and the inflows coming into these other ETFs. I think it's starting to level off in the next couple days.
Right. And I just want to let our listeners know, yes, to follow you on Twitter, because that's where we connected, or X, whatever you want to call it now.
Yeah, sorry, X.
And it's just really what you post is actually very informative. You do screenshots, you do all of this analysis. And I saw that and I was like, oh my gosh, I need James on the podcast. I mean, obviously you were on everybody else's podcast before mine, but that's okay. You're still here. And I just encourage everybody to follow you because you are really, really knowledgeable. So I appreciate it. And I appreciate everything that you're doing and your insights.
Thank you very much. I really do appreciate those very kind words. I will
Yeah,
say I'm an expert on the ETF side of things, and I know a decent bit about Bitcoin and DeFi in general, but I am by no means an expert. So on the ETF front, I'm your guy. And
totally.
TradFi, I'm more a TradFi guy, but I'm doing my best to get up to speed on the rest of it.
Yeah, no, you're doing a great job. So James, thank you again. It's been a real pleasure and an honor having you on the show. And I just, can't wait to see what's in store and to follow you and see what happens.
Thank you very much. I'm excited too. It's been fun so far, and I hope it's continued. I hope it continues to be fun. We'll be watching what happens next with Ethereum, and I'm still watching this Bitcoin ETF race every single day.
Yeah, cool. Thanks, James.
Thank you, Rachel.
Special thanks to Aaron Bender for producing Web3 Deep Dive podcast. I'd also like to thank the sponsors behind Web3 Deep Dive. Finally, thanks to the listeners for tuning in. Please be sure to subscribe, like, and share. I'll see you guys next time.